So what are your thoughts on this persistent green on the screen and red on the vol screen for the most part, even though we are heading into day 2 of a government shutdown soon?
The shutdown was pretty well anticipated. We've been here before, so this is not the kind of shock I think that anyone expected to create a volatility spike. And in terms of VIX at 16.5, okay, that's higher than it was yesterday, but it's obviously still at the low end of its historic range. But again, VIX is a funny mix, right? It's a forward-looking measure, but a lot of it is based on what the realized volatility has been, because anybody that buys volatility, if they don't realize what they paid for, they're not going to want to buy it anymore. They're going to go away. They might even turn into be a seller. If you look at realized volatility, the 30-day vol hasn't been above 12 in weeks. We are just realizing very low volatility. Part of that is coming from the fact that you still have some fireworks going off in terms of Palantir, NVIDIA, whatever, but you have a lot of canceling out going on at the index level. And I've said this before, that is the whole point of an index, is to provide diversification, and diversification is a lower volatility strategy. That's what's happening. And the truth is, until we get some sort of shock, and we probably will. We do know what this administration, they do like to shake things up every once in a while, but the way things are right now, it's been a relatively quiet trudge higher, and we're basically sitting very near all-time highs, if not at them, for most of the big leading stocks. But it's a strong market, and people can't afford to be uninvested. The biggest risk out there is not being in the market. As much as it's easy to get very concerned, I think we're up 17% year to date right now for SPX. That's pretty strong, and we're only starting the fourth quarter. But there's not a lot of fear out there right now, and the truth is we haven't seen a lot of reasons. Now, I do think that because we're going into the fourth quarter, people do and should start hedging their books. And so we might start to see a little bit more demand for puts, a little bit more action. But for now, it's been a pretty mellow trudge